Florida, home to sunshine, beaches, and now a storm brewing in the housing market. From spiking insurance to crashing prices, some say it's déjà vu from 2008. But is it really? Let's find out. Something strange is happening in the Florida housing market. For years, it was red hot, fueled by remote workers, retirees, and investors chasing sunshine and profit. But now the tide is turning fast. Across the state, homes are sitting longer. Sellers are slashing prices. And in some cities, inventory is piling up at rates we haven't seen in years. Take Tampa. In just 12 months, active listings surged by more than 45%. In Jacksonville, median home prices have dropped by nearly 4% year over year. Condos? They're dropping even faster, especially in older buildings facing new safety regulations. Naples, Cape Coral, Fort Myers, Sarasota, Daytona Beach, all seeing sharp slowdowns. Buyers are backing off. Mortgage rates remain high, and insurance premiums are soaring. Many would-be homeowners simply can't afford the monthly payments anymore. Investors, too, are pulling out, spooked by shrinking returns and rising costs. Realtors are calling it a cooling off. Some analysts say it's a correction. But on the ground, it feels more urgent, more fragile. Just a year ago, people were bidding six figures over asking. Today, those same homes are sitting empty. Even new construction is feeling the chill. Builders are cutting prices, offering incentives, and canceling projects. Oversupply, once a distant worry, is suddenly very real. This isn't just a dip. It's a shift. Florida's market is still beautiful on the surface, blue skies, palm trees, and luxury listings. But underneath, the foundation is starting to crack. And the big question now is, how deep will it go? Whenever the housing market stumbles, one question always echoes in the background. Is this another 2008? It's a fair question, and in Florida, the signs feel eerily familiar. Home prices soared. Investors flooded in. Construction boomed. And now we're seeing the slowdown. But let's get one thing clear. This is not the same crash. Back in 2008, the foundation was built on sand, subprime mortgages, predatory lending, and toxic financial products. People were buying homes they couldn't afford with loans that should never have been approved. When the bubble burst, it took the entire economy down with it. Today's picture is different. Most buyers in recent years were backed by stricter lending standards. Many paid in cash. Banks weren't giving out zero-down loans to anyone with a pulse. And that makes the market more stable, at least on paper. So why the fear? Because this time, the pressure is coming from outside the system. Rising insurance premiums, climate risks, regulatory hurdles, and affordability breakdowns. These aren't bad loans. They're bad fundamentals. Yes, prices are falling. But it's not because banks are foreclosing in waves. It's because buyers are pulling back, and sellers are finally blinking. In 2008, the collapse was sudden and systemic. What we're seeing in 2025 feels more like a slow unraveling. But here's the truth. Even if the mechanics are different, the outcome might rhyme. Overvalued homes. Economic stress. A growing disconnect between price and reality. So no, it's not a replay of 2008. But that doesn't mean we're in the clear. This could still hurt, just in a different way. If you want to understand what's really shaking the Florida housing market, you have to look beyond mortgages and market cycles, and straight into the storm. Literally. Florida's housing slowdown isn't just about high prices. It's about climate risk colliding with an insurance crisis. In recent years, hurricane damage, flood claims, and soaring rebuild costs have driven dozens of insurers out of the state. The ones still standing, they're raising premiums fast. In some areas, homeowners are paying 3 to 5 times what they did just a few years ago. For coastal condos and older homes, insurance costs can exceed $10,000 a year, and that's before property taxes or HOA fees. Suddenly, a dream home becomes a financial anchor. Then came the Surfside condo collapse in 2021, a tragedy that reshaped Florida law. Now, buildings older than 30 years face strict recertification rules and mandatory repairs. That means massive special assessments, $50,000, $100,000 or more, slapped onto owners just to keep their buildings compliant. The result? A wave of panic selling, especially in older high-rises near Miami, Fort Lauderdale, and Daytona Beach. Buyers see the risk. Lenders see the risk. And appraisers? They're cutting valuations to reflect it. This is uncharted territory. In 2008, bad loans crushed the market. Today, it's climate exposure, skyrocketing insurance, and legal risk dragging it down, quietly, relentlessly. And the worst part, these aren't temporary glitches. They're long-term structural shifts. Florida isn't just fighting a housing downturn. It's fighting against nature, policy, and a growing sense that maybe paradise comes with a price too high to pay. So, how bad could this really get? That depends on who you ask, but more and more experts are sounding the alarm. Real estate analysts, economists, and even seasoned investors are warning that certain Florida markets are deeply overvalued, and that the correction we're seeing now may just be the beginning. According to data flagged by Norada Real Estate and other sources, markets like Cape Coral, Punta Gorda, and Fort Myers could face price drops of 20 to 40% over the next few years. That's not a dip. That's a crash, especially for recent buyers who may soon find themselves underwater. Builders are already reacting. Some have stopped projects mid-construction. Others are slashing prices or offering big incentives just to move inventory. Cancellations on new home contracts have also spiked, a classic red flag in a cooling market. Even Wall Street is watching. Institutional investors that once bought Florida homes in bulk are now scaling back or exiting entirely. The numbers don't work anymore, not with declining rents, falling prices, and skyrocketing insurance costs. And it's not just professionals raising concerns. Across Reddit forums and real estate threads, Florida residents are posting first-hand accounts of price cuts, vacant homes, and condo boards scrambling to cover new assessments. One user wrote, "It's not a crash. It's a slow bleed, and no one knows where the bottom is." That's the thing. This isn't about panic. It's about gravity, and how far these inflated markets have to fall to reach reality. Because if the experts are right, we're only halfway down.